All right, we're back. Let's go through some of these committee moves I said we had today. Well, that was quick. McDonald's. I said on the day that you bought it, you almost cornered the burger market with Shake Shack, and you needed just a couple of other names. But now you've sold McDonald's, hit a stop loss on it.
Yeah.
Did you think you'd be this short time in this name?
So you hit it. No, you hit it on the nose when Shaq reported and just absolutely blew everyone away, and all the upgrades started coming in. I just said, like, if I want to hold this position at the size that it is, I don't really need the McDonald's. So I tightened the stop, and I got knocked out of it. So cut down a couple of points from where I bought it. I think McDonald's will be fine this year. I think it's going to have a good year. It's not a cheap stock, but it shouldn't be. It's one of the best executors in the space. So I'm not bearish on McDonald's. It's just a stop loss. NBD. What else do we want to do?
No, I mean, but Shake Shack, by the way, I mean, you can't almost talk about one without
I can't
the other.
sell it. It's the best.
It just got upgraded to outperform again today at Cowen. Price target goes to 125 from 91.
My friend,
so we just
listen to me now and believe me later. There is no company in this space that, for me, has the same amount of potential right now as Shaq has. Like, Chipotle is better, but that already actualized. This is the one that hasn't yet actualized, and I don't want to own both of them. I can't part with this thing. Think about what's been going on here. They're growing now 20% a quarter. Okay, so full stop. Can't think of another QSR play growing at that rate. They can because it's only a few hundred stores. They haven't had revenue growth under 17% since the first quarter of 2021 when they were still shaking off the pandemic. They've gotten more profitable. 7 quarters ago, they were losing money on a net income basis. Now they're beating the street on a regular basis. They just saw the best net income this past quarter since they came public. And they're opening stores at a rapid pace. And they're licensing to foreign operators in like 30 different countries. This is the stock. This is the stock. So McDonald's is okay. This is what's popping in the street.
Yeah, moving a little bit now too. You sold Zoom. Tell me about that one.
The stock.
Tell me about that one.
They had a good earnings report. It ran up, and then it started to fall off. And I said, you know what, life is too short. So I only have X dollars that I want to allocate to tech and communication services. I don't have any time for this one. I think they'll be fine. I think there is a potential for growth here, and the multiple is like 12 times forward at this point. So it's not an expensive stock. I don't think there's a lot of risk. It's just doing nothing. It failed at 70, and I just looked at it and I said, I have so many other things I would rather be doing right now than watching paint dry.
Let me ask you this, and this is purely anecdotal, so maybe there is absolutely nothing to it. The fact that I feel like I get many more, and maybe you all feel the same way, I don't know. You get more Teams invites than you do for Zoom these days. Does that mean anything?
Google Meet. But that's why the stock is where it is. It's in an 80% drawdown. Everyone gets that. The story of Zoom is can they become an enterprise provider for other things and just use the calling feature as like the Trojan horse to get into Fortune 500 companies? They're making some progress. They're signing up customers for upgraded services above and beyond video. We all get that video is a commodity. So they don't have to really compete with Microsoft. They just have to get big enough where Salesforce says, screw it, let's buy it. From my perspective, that's what could happen with Zoom. The problem is the pace. It's happening very, they're just not growing quickly.
Okay, Brian Belsky, let's get to 2 moves quickly from you. You trimmed your stake in Home Depot.
Yeah.
Why?
Well, we've owned it for 12 years. It's been a core name in our big cap space. We want to become tighter in certain areas like Lulu. We love Lulu.
You bought more?
We bought more.
Okay. Tell me more.
Well, Lulu, brand name. We've owned it for a long time, not just because we were for a Canadian bank, but it's listed in the U.S. But we love the theme of Lulu and their new product offering and what they're doing. And the stock went down a little bit in the beginning of the year, and that's why we bought more.
All right, Leslie Picker has the headlines for us. Hi, Leslie.
Hey, Scott. Yes, President Biden will reportedly unveil an emergency mission to establish a new port on the Gaza coast tonight at this State of the Union address. According to NBC News, the move would allow more food, medicine, and other supplies into the war-torn enclave. The operation will not require American troops on the ground. The Swedish government formally joined NATO this morning, becoming its 32nd member after the Prime Minister handed Secretary of State Antony Blinken the accession papers at a ceremony earlier this morning. The Prime Minister will also be a guest of honor at President Biden's State of the Union address tonight. And YouTuber Jake Paul is getting into the ring with boxing legend Mike Tyson this summer, and it will be shown live on Netflix. The streaming giant announced today the two will fight in what it calls a boxing mega event on July 20th inside AT&T Stadium in Arlington, Texas. The event is Netflix's latest push into the live sports realm. You can think of some metaphors there, but definitely one to mark your calendar for, Scott.
All right, Les. Thank you, Leslie Pickard. You think that's going to be a fight?
I think it's going to be huge, like globally. This is going to be one of the biggest things Netflix has ever had people concurrently watching. And that's really key, because if they want to...
You're being serious.
I'm being dead serious. I think Netflix...
Sometimes I can't tell.
I think Netflix is going to get like the NFL in a couple of years. All of this is a precursor. Them showing off their ability to coordinate a global audience where people in Asia are watching that fight at 2 o'clock in the morning or whatever. Like, they're going to be able to do something that almost no other platform can do. Certainly not broadcast networks, probably not traditional pay-per-view. What you're watching right now is a precursor to the future. And Netflix, like, really has the ability. I know it's not like boxing purists are going to have like 80 different problems with this. I probably won't even watch it. I just think it's fascinating that they're leveling up in live sports in a way that a lot of people didn't think that they would.
Netflix up 1.25%. Does anybody own Netflix on the desk today?
I wish I did. Does that count?
I think it's in a horse race between YouTube and Netflix in terms of the NFL.
Yeah, I agree.
For sure, they're lining that up.
You like this move that they've clearly been making into live sports?
I love it. We've said for a long time that Netflix is the Kleenex of streaming, and they're going to be the winner. They have been the winner. They'll continue to be the winner.
All right.
All right, and this is the part of the show where I break down the stocks that were talked about in the CNBC video. So firstly, we have McDonald's. You can see a very, very consistent uptrend pattern, hugging the 200-day moving average in the green, and we also have the 21-day moving average in the light blue. So you can see it's above both of them, making very nice patterns, holding up a very nice support. It is kind of at recent highs, has been slightly getting rejected, but overall, that does look bullish. That does not look bearish. If anything, looks like we've got a leg up, then some consolidation, should be another leg up to 330 or past. Then they talked about Shake Shack. Josh Brown was very, very happy about Shake Shack. He's very interested in having a position. This chart is it's catching me by surprise. I was not expecting the chart to be this ugly. This is horrible. Let's look at it in the weekly chart really quick. Make the candles a little bigger. This is just an awful chart. Now you can see from July of 2022, it's been doing pretty decent. But other than that, guys, this is not a good chart. This is not something I want to be invested in. You can see it's coming around previous highs. And when it gets up here, it gets rejected hard. I mean, all the way back down. Let's look at some of these percents. When it gets up to this range, 70% down. We won't even go to the all the way high. Let's see what this is. This is another 70%. So guys, when it gets up into the $100 range, it can fall as far as 70%. Now this time could be different, but I'm not a fan of Shake Shack to say the least. Zoom, one of the stocks that blew up during the pandemic, and you can see has lost, my goodness, I would assume 90%, 88% of its value, guys. Let's look at this last year and a half. You can see it's got a pretty good base on it. It's still kind of descending. We're still having kind of lower lows. See, this one's lower than this one, and this one's lower than this one. This one is a little higher, but guys, this is not something you want to be invested in either, in my opinion. Unless you're spot on buying the lows and wanting to sell the highs or wanting to do some day trading, or you know that for some reason this is going to be different, but based on technicals, descending pattern, guys, and this is not a good looking stock by any means. They also mentioned Google. We brought this up in the last video. If you haven't seen that, make sure you check it out. We broke down about 12 or 15 stocks. Google is looking fantastic right now. It's down around 12 or 13%. It did get rejected around the same highs as last time, but you throw this on a weekly chart, guys, it's hugging at 21 weekly. It's looking pretty good. If anything, I think it's going to snap back just like this, and we're going to make new all-time highs pretty soon. It's hugging right now on the weekly chart, the 200-day moving average, which is a great sign to bounce off of. Very long-term bullish. Microsoft doing one of the best companies in the market right now, just most consistent, stable. Look at this. Look how consistent that leg was, then a pullback, and then just straight up into eternity. Sure, they have pullbacks, guys. They have a lot of pullbacks. Stocks always do. But what's the main theme? This stock goes higher and higher and higher. And now that AI is out, they figured out a way to monetize it even more. And that's what this last leg is from. and I don't think it's stopping anytime soon. Microsoft can be in the 400 to 500s, at least 450 by the end of the year for sure. I don't think this is going to have a leg down. If I had to bet leg up or leg down on Microsoft, I'm betting leg down. Look, we already kind of have a triple bottom, if you ask me, short-term triple bottom. That's looking pretty bullish. They were looking at Home Depot. I know this one sold off during the pandemic. I had this in my dividend portfolio at one point. We've got a triple to quadruple bottom type going on here. Very bullish. A nice support level formed for sure long-term. And now we've broke out of this high. So this is looking very bullish. It's still holding higher highs and higher lows. We are on a slight pullback right now. But guys, looks like it's back on the way to 420. Hey, 420. They talked about Lululemon. This has been a fantastic company over the years. It just grows and grows. It does have some nasty pullbacks though. Let's take a look at some of the percents. 52% back in the Rona crash. Here's another 25% sell-off, guys. I mean, this thing can drop 20-30% like it's nothing. There's another 30%. There's a 42, all of 50%. So this thing can give it back, but at the end of the day, it's making new highs and higher lows. And it is a starting company. It's only a couple years old. So the charts are going to look like this, but in the end, this is bullish. It's on a nice pullback. It's looking like it's making a support here, and should head back in the 500s. Netflix was the last stock that they had. Got absolutely decimated, like something we've never seen in 2022. I mean, the stock just dropped 20% after earnings, 20% after the next earnings, and just huge gaps on the chart. And they're still here. Look at these gaps. But from peak to trough, it fell 76%, guys. This stock before was doing amazing. You can see it's made some wedges, and it likes to break out of the wedges. This has just been a perfect upstairs case pattern, however you want to say it. It's just an upstairs case pattern, perfectly bullish. It looks very, very strong, honestly. It's still making higher highs and higher lows. It does look very, very volatile, guys, so the pullbacks can be pretty deep. But as of right now, it's gapped up on earnings, and it's holding that move, and it looks to continue to go higher back towards 700. I hope you guys enjoyed the video and learned something. If you do, make sure and smash that like button. Hit the subscribe button for me, and if you know somebody that likes these type of videos, share it so I can grow the channel. I appreciate you watching, and I'll catch you in the next one.